In San Francisco, and this is Bloomberg Technology. Coming up in the next hour, worker protests come to a head at Google. Now the company is doing away with one policy that thousands of employees have criticized. Plus, we sit down with investor Keith Raboy, who just made a big move in the VC world, leaving Khosla Ventures to join Founders Fund. We talk about his strategy in 2019. And Netflix could be crowned the big winner at the Oscars on Sunday. We will take a look at the streaming giant's strategy to take over Hollywood. But first, to our top story. President Trump and China's lead negotiator both agree that a trade deal will probably happen as both parties decide to work into the weekend. Tom Mahedi with Bloomberg Economics joins us from New York with more. So, Tom, the president said he might be willing to extend the tariff deadline a month, that he could be meeting with President Xi in the not too distant future. What is the latest that we know?
So there was some discussion today, particularly around exchange rates and the yuan in China and how much the devalued yuan is affecting the U.S. economy. But we don't view that as a particularly big development. The larger question has been tariffs and will continue to be tariffs. Last year in 2018, the Trump administration put tariffs on $250 billion in Chinese goods. That's a substantial number. The tariff rate on those goods is different. You've got 10% tariffs on $200 billion and 25% tariffs on $50 billion. But so far, that has been the story and has had very little impact on the U.S. economy.
That was my next question. How much has this actually impacted the U.S. economy and vice versa? How much has it affected the Chinese economy?
Yes, so the impact of the Chinese economy is definitely more severe than to the U.S. economy. And the reason for that is the U.S. economy is a domestically driven economy. That's not to say that trade doesn't matter. It's just that what happens inside the United States, domestic spending, investment, consumer confidence, matters more than trade. That is less true for the Chinese economy, which relies more on external developments than the U.S. economy. Now, the impact here has been mostly price pressures. So the tariffs increase the price of goods, which means that producers of things like steel and cars and things like that who are buying products from China, these kind of these non-durable goods from China coming over have increased in price. That means what's happening here is modest price pressures. That is not really translated through into a reduction in real activity or real reduction in production so far. But looking ahead could be a little bit different.
All right, Bloomberg's Tim Mahedi for us in New York. Tim, thanks so much for that update. Meantime, a victory for employees at Google. After months of worker protests, the company has announced it will end the policy of forcing its employees to waive their rights to bring class action suits in court. The move comes after Google ended its policy of forced arbitration in cases of sexual harassment and assault, a policy that caused 20,000 employees to walk out in protest last year. To discuss, I want to bring in Bloomberg Tech's Mark Bergen, who, of course, covers Alphabet. So explain what this actually means. If you have any claim against Google, you can take that case to court?
Yeah, starting in March, you can now. So that was, employees had before this fall mandatory arbitration agreements when they signed with Google. What's also been important in this situation yesterday was that a lot of employees said that when in the fall after the Andy Rubin case, the former executive, there was this big Google walkout, and they changed the policy around that, as you mentioned, for sexual harassment. A lot of employees mentioned that wasn't the case for Google contractors, and we've reported that there are possibly twice as many Google contractors that there are, as many Google contractors that there are employees. What they did yesterday was they actually, and they said now that they're going to start enforcing that with the contractors they work with.
As well.
Yeah, I think they're saying that they'll no longer be written into the contract with Google. The contract, the companies that hire them, those agencies could still have their own terms. So that necessarily, those employees could not be forced into arbitration with those companies, but not necessarily with Google.
Could we see a flood of lawsuits against Google as a result of this?
I mean, that's a very possibility. Again, I don't think it's something that investors are concerned about. The stock didn't really move. Google has billions of dollars in cash. But it's certainly a victory for its employee base. And this is an employee base that has spoken up. The same sort of protests here that have been mobilized around Pentagon contract around their work in China. So it does speak volumes about the way that the employees are able to influence policy at the company.
Now, I do want to get a quick update from you on this YouTube horrifying pedophilia story where you were seeing comments in the comment section that somehow indicated towards a pedophilia ring. YouTube came out and made a statement saying any content, including comments that endanger minors, is abhorrent. We have clear policies prohibiting this on YouTube. We took immediate action by deleting accounts and channels reporting illegal activity. More to be done. Do you think that this is going to have an impact on advertising?
You know, what we saw was another cycle from almost 2 years ago now. There was this massive advertiser boycott. YouTube doesn't break out sales, so we don't know. We've heard estimates that it could have had damage. We just don't see it in the numbers because Google's advertising revenue has just been a colossal machine, and YouTube is still growing. YouTube is also, it's a big long tail advertising machine. So even in AT&T, which is by some measures the largest advertiser in the country, if they pause their spending, YouTube has plenty of other advertisers willing to continue spending. It's unclear if like last time, if a lot of the advertisers will just have a week or two of pausing, or if this will be more sustained.
This is a much bigger problem, though. Obviously, this particular story is incredibly awful. But if you look in the comment section on almost any YouTube video, it's nasty, it's hateful.
Yeah.
No matter what the video is about, it could be a very mundane Bloomberg technology video, and people have a lot to say.
Dumpster fire. And the question is, why does YouTube keep comments? And part of it is because YouTube they see it, they don't talk about it, but they see it as a social media platform. It's a sharing platform. It's something where they're competing for video dollars with Facebook. And in the same way, they want to build communities. And there are certain creators, YouTube creators, that have communities with their comments. But this is another case where YouTube in particular, is just this massive platform. Google does not quite have the AI and certainly the personnel or the resources. They haven't devoted enough resources to contain that problem. And so they're constantly playing this cat and mouse game in this case now with this new type of predatory behavior.
All right, well, I know this is something you've been covering a lot, and you're continuing to cover. Mark Bergen for us and Bloomberg Tech. Thank you. Coming up, Keith Rabois is on the move. He's joining his former colleague Peter Thiel at Founders Fund. We will ask him why next. This is Bloomberg. Twitter announced Friday that co-founder Ev Williams will step down from the board at the end of the month. He said, quote, "It's been an incredible 13 years, and I'm proud of what Twitter has accomplished during my time with the company. I will continue rooting for the team as I focus my time on other projects." Williams was previously chairman and CEO of Twitter. Well, venture capitalist Keith Rabois has had his hand in many, many, many Silicon Valley startups. He's backed fintech startups like Affirm and Stripe. He founded Opendoor, and before all of that was part of the PayPal team, the early PayPal team with the likes of Peter Thiel and Elon Musk. Now he is leaving Khosla Ventures and joining back up with Thiel at Founders Fund, the venture capital firm that Thiel started, which has invested in companies like Facebook, Airbnb, Palantir, Lyft, and more. He'll be a general partner at the firm, investing across all sectors at all stages of growth companies. And he joins me now here in the studio. So Keith, my favorite tweet about your move was am I to believe that Keith Rabois has joined the NBA? You definitely set Twitter aflutter with this news. Why the big jump to Founders Fund?
Well, as you know, I started my career in Silicon Valley in technology, working for Peter, and I basically quote something that Peter taught me every day of my life to somebody. And in fact,
like, give me an example.
The primary principle that I learned from Peter that has actually really propelled my career, both as an executive, as an entrepreneur, and as an investor, is that you have to find undiscovered talent, and that you can't build a career, you can't build a startup by processing the same people in the same way that everybody else does. And so I learned that in November 2000, my first week at PayPal, and I've sort of learned how to apply that to identify talent, assess talent, and groom talent across the last 18 years. And so doubling down on that, going back sort of to my roots and working with Peter again is really exciting. Plus, every single person that works at Founders Fund as a partner is somebody that's a friend of mine or an associate or principal or somebody I've recruited over my career. So being able to work with everybody who's like a friend was a fascinating opportunity that pretty unprecedented, actually.
Was there something you weren't happy with at Khosla?
No, as we've discussed, I was at Khosla for 6 years, led many investments, probably about 20, 25 investments. Vinod was on my board at Square. David Wyden was on my board at Slide. So I had a KV partner on my board for 7 years in a row. It was a great experience. Obviously, I don't like commuting to Menlo Park. It's become more painful. I live in the city. I think the center of gravity has moved to the city. Even Y Combinator is hosting its first demo day in San Francisco for the first time in March. So I just prefer to be in San Francisco.
You mentioned the center of gravity moving to the city, but like Peter Thiel has moved to LA, and you've got all these investors saying, you know, the future's outside of Silicon Valley.
Yeah, I disagree with that. He's moved to LA, but Founders Fund is based in San Francisco, and as far as I know, we'll be staying in San Francisco. The critical density, to create a PayPal, you need a critical density of talent, and you need to hold this critical density of talent together for a sustained period of time. The critical densities of talent are still mostly here. You can certainly build outrageously successful companies elsewhere, but it's very difficult to do that. Here, in any field, whether it's design, marketing, business development, engineering, you can find extraordinary people that know how to scale a company. That's very difficult to do in other geos.
So you think investing in other cities is a tough sell?
I think it is. I mean, for me, one of the reasons why I like to invest in Silicon Valley is I'm very actively involved in most of the companies I back. And I've found that as geographic distance expands, my ability to influence the company contracts. And so I prefer to be at offices that I can go visit every week if necessary.
Speaking of, you've got 14 or 15 board seats?
Something like that.
So what happens to the board seats you racked up while you were at Khosla?
It's not yet resolved. We'll discuss it on Monday and figure out what the best path forward is.
So what's your strategy in 2019? We're in the middle of a trade war. There's political and economic uncertainty. And I've even heard some investors say there's not a lot of exciting startups right now, believe it or not.
Well, I disagree with the last. There's a lot of very exciting startups if you know where to look. I think if you look in the same places that people looked 5 or 10 years ago, they may not feel that exciting. But at the frontier of technology, there's a lot of interesting innovation going on in healthcare, in space. There's definitely a lot of raw material. So what I like to do and what I focus on is very early stage investing, like the proverbial 2 kids in a garage that have a ridiculous idea and have some absurd notion that they're going to take over the world. And I think those companies are very insulated from what the current macro environments are because it's a 5 to 15-year journey from today. So I'm going to continue to lead investments at the very, very beginning of the company's trajectories, whether it's denominated as a seed stage investment or a Series A. But that's what I like to do.
So what's your strategy? I mean, are there specific sectors that you have your eye on?
No, I'm not a sector or thesis-driven investor. I'm a people-driven investor, founder-driven investor. So really, it's the spark from an individual or a spark from a team that they communicate to me and convinces me and persuades me that there's a different future in some vertical, and then I'm along for the ride.
How important is diversity for you when you're looking for people?
Diversity, I think absolutely the most important thing is that someone has what Peter calls secrets. So to be successful in starting a company from scratch in an industry that has a lot of incumbents and a lot of power and a lot of money, one has to have a projection of the future that nobody else agrees with that turns out to be insightful. So I think that diversity of ideas is absolutely indispensable to success. If one were to just follow the conventional wisdom, there's no way anybody would start any of these companies. The idea that Tesla, for example, would be the most important auto manufacturer in the world in Silicon Valley with no experience anywhere in auto manufacturing would have seemed crazy in 2005. But in fact, every review of every automobile in the world ranks Tesla as the single best product. So I think that's true in any field, that outrageous people with ambition and with different ideas can actually conquer the world.
Now, there are many, many people who work at Founders Fund aside from Peter Thiel, but Peter Thiel gets a lot of the attention, a disproportionate amount of the attention, made waves by supporting President Trump, which was, again, a contrarian bet that, not a lot of people in Silicon Valley agreed with. Do you think that Trump has hurt or helped Silicon Valley at all in his term? I mean, what has been the impact of the Trump administration on tech?
I think there's some pros and cons. The FDA has become a more progressive institution, is more innovative, more innovation friendly. I think everybody agrees with that. It's been harder on immigration, which has propelled most of Silicon Valley's success for the last 40 years. something like 60% of all important companies founded in Silicon Valley over the last 40 years have a first-generation immigrant as a co-founder. So I think the restriction of immigration is pretty controversial. The debate and the confrontation on China on trade is actually probably split 50-50. I think about half of the people in Silicon Valley think it's a really good idea to push back on China, and about the other half are a little bit more establishment in their thinking about China. So that one's proven to be, and it diverges across ideological spectrum. It's actually interesting. I have a lot of liberal friends who think confronting China is the right thing to do, and I have a lot of conservative friends who think it's not the right thing to do. So that's actually been an interesting divide. So it's a mixed scoreboard.
Now, if I remember correctly, you didn't vote, right?
Correct.
Is anybody catching your eye this time around, or a Trump re-election?
Well,
I know this is not about politics, but I'm
sure.
always really curious what you're thinking.
I'll be a Nikki Haley supporter when she runs for president. I don't know what year that's going to be.
Okay. So we're expecting a big tech IPO market this year. What's your outlook, including Lyft, which you invested in before it was Lyft?
Yep.
How do you think the various companies are going to perform?
Well, I think there's a lot of great companies that have been built over the last decade. Airbnb, Lyft are certainly some of them. There'll be others. And I think that, my view has always been that companies should IPO early in their trajectory and early in their careers. I wrote a whole chapter in the High Growth Handbook about why. Me and Bill Gurley are really the two proponents of IPOs. So it's nice to see these companies going public sooner rather than later. If it's up to me, a bunch of companies I've invested in would go public sooner rather than later, but we'll see. I don't always win those debates.
And how do you think about Lyft versus Uber?
Well, I think Lyft, I've been on this program many times. Several years ago, lots of people were predicting the death of Lyft, and I was on here explaining why Lyft was going to be successful. I think people overestimated the network effect in that business. So in any city in the United States, as long as you can get a car, within 3 to 4 minutes, there is no network effect. So you have to get enough supply so that you can satisfy demand within roughly 3 to 5 minutes, but after that, it's diminishing marginal returns. So Uber's been distracted with all these international adventures where they basically lost money, and Lyft's used that time to build their supply across almost every American city, and Lyft's going to be very successful.
Have you found that SoftBank bringing in these massive amounts of money to Silicon Valley, is it changing the game for you? And do you like this?
Well, I don't think money is a great solution for most startups. I think enough money, enough oxygen to prove that you're right, that you have product market fit is critical and indispensable. But I don't think money solves problems for startups. It usually creates more problems than it solves. If you're really right about the direction of the world and you have a value proposition that resonates with lots of people, money isn't that critical.
So do you think SoftBank could be messing things up?
Yes, I think a lot of companies are not disciplined and they spend money when it's available. When the price of capital is too cheap, it actually creates a distortion like any other product. And historically, over the last 3 to 7 years, the price of late-stage capital has been fairly inexpensive. It's almost like if oxygen is free, you don't think about consuming oxygen. If every time you had to take a breath, you had to pay for it, you'd be judicious about where you were going for a run. And when you were going for a run.
Okay, so then what happens in 5 years?
I think what happens in 5 years is
fail, or
well, I think a lot of these companies will
SoftBank
fail.
doesn't make money. What?
Yeah, I don't think SoftBank's returns are going to be exceptional. I think the Journal just broke a story, criticizing SoftBank from an investor standpoint. I've criticized SoftBank more from a moral or philosophical standpoint, but I think the returns will be pretty subprime over at SoftBank because they're powering money into companies, and money isn't the solution. If money was the solution, Microsoft would have dominated the last 20 years. Google would be dominating the next 20 years. Apple would always be dominating, but that's not true. Apple was on the precipice of bankruptcy.
What are the moral issues?
Well, the moral issues are most of the money, somewhere between 60 and 80%, comes from Saudi Arabia. Obviously, in Saudi Arabia, it's illegal to be gay. It explicitly discriminates against women in many dimensions. It's anti-Semitic, et cetera, funds terrorists across the globe. So I think taking money from people who are up to no good is not necessarily the best thing. I'm proud of the LPs I've worked with at Coastal Ventures. They're typically endowments, major universities, major hospitals, and at some point in your life, you want to make money for people who are up to interesting things and having positive impact in society versus making money for people who are propelling, an archaic future.
Mm-hmm. And I should say, these are your opinions, but always appreciate you sharing them. Keith Raboy, so good to have you here on the show.
Pleasure to be back.
As always, we'll be watching to see how you perform in the NBA.
Thank you.
Thank you. All right, some of tech's biggest names are heading to Barcelona next week for this year's Mobile World Congress. But will political tensions overshadow the latest product launches? We will discuss next. This is Bloomberg. Over 2,000 companies are expected to showcase their latest products in Barcelona next week at Mobile World Congress, with 5G and foldable phones expected to take center stage. But while the mobile industry's biggest show has historically been a place for deal-making, this year is shaping up to be a showdown between Huawei and the U.S. government as Washington pushes other nations and wireless carriers to ban the Chinese company. Joining us to discuss, Anand Srinivasan, Bloomberg Intelligence senior analyst. So, Anand, what sort of developments could we be seeing out of this Huawei story next week?
Look, I think, hey Emily, thank you for having me. I think that, look, there's going to be an overarching sort of a negative view towards Huawei from the US and potential and allies, right? So if you look at the 5G market that is shaping up, where Mobile World Congress has been a leading proponent of showcasing such technology, this has become a distraction. So you've got the US Huawei issue, you've got the China tariff issue, you've got 5G potentially slower launching because the use cases in the near term aren't that strong enough. So you've got all of these issues sidelining from the important technology which companies like Huawei, companies like Nokia, companies like Ericsson, and companies like Qualcomm use to showcase. And unfortunately, this is becoming a distraction. So I think that when you look at Mobile World Congress this year, we may find that it's more shiny stuff and less substance this year. And this is one of those distractions.
So what are the substantive announcements you are expecting?
Look, I explicitly want to see the shape and the potential ARPU growth potential for carriers in the near term. Even just random use cases. This is when we're launching 5G. These are 5 ideas where we can use 5G to make money over and above what we were doing in 4G. We're not launching it en masse. We're launching it to these 5 areas or these 5 use cases, these 5 customer types. And this is how we're going to make more money. And that is that's going to be interesting. I mean, I expect stuff from NTT Docomo, SK Telecom, and even Verizon, which had their analyst day yesterday. So those could be the sort of the specialty use cases. They may not be as widespread as we would like, but I want to see more ideas out there, number one. Number two is I want to see specific launches on how fast this can grow in 2020. And then the third part of it, potentially the least interesting for me, is 5G handsets and what shape that could be in 2019 and 2020. Again, my expectations are low. I want to be surprised, but I'm not holding my breath here.
We're watching to see what the reception will be to foldable phones. Bloomberg's Anand Srinivasan, as always, thank you so much for stopping by. Coming up, Lenovo stock surged this week as stronger earnings reassured investors the once ailing PC giant has turned the corner. We're going to hear from CFO Wai-Ming Wong next. This is Bloomberg. This is Bloomberg Technology. I'm Emily Chang in San Francisco. This week, PC maker Lenovo reported better than expected fourth quarter results thanks to lower memory prices and a mobile business that showed a profit for the first time since it bought Motorola in 2014 for $2.9 billion. The data center division was one of Lenovo's star performers, with sales jumping 31% in the period. Bloomberg Sharian sat down with Lenovo CFO Wai-Ming Wong and asked how sustainable the data center business is in the long term.
We definitely will continue to execute the strategy where we would want to drive, I think, super growth, I think, in terms of top line, and then at the same time maintaining improvement of profitability over the period. Because we are very positive about, I think, the prospect, obviously, of the data center. In fact, we are very positive about, I think, the changing the business, I think, from a device company to a more smart era, where there are a lot of data I think all our devices are going to be smarter, and as a result, there will be huge demand, I think, of our smart infrastructure division business, I think, which is the DCG today.
But can you sustain the level of sales growth that you're seeing now?
Well, we definitely will do much better than the market. I think as always, we've been actually driving the business at a significant premium to the market. I mean, obviously, the market will go up and come down from time to time, but because of our diversified portfolio, I think in all the geography that we're actually doing business around the world, we feel that I think our execution, as well as our product, the technology, the execution efficiency will definitely help us to do, I think the strategic objective that we set out for ourselves.
When do you expect to become profitable?
Well, I think this has been a question that everybody asks. I think that we definitely will believe that we'll be profitable over time, but the more important is the strategic importance of this activity is we really want to, I think, super grow our top line at the same time improving profitability. So I definitely will see that. I think as you can see in the last few quarters, we're actually improving our profitability quarter to quarter. I think if we want to follow that trend, I think it will come pretty soon.
Within the next couple of years?
I would say within, rather than a couple of years, I think we'll be pretty soon, yeah.
You've been actually also benefiting from the improvement in the PC market.
Right.
How long do you expect the momentum in the PC cycle to last?
I actually would attribute to our success not really, well, I think the market definitely helped, but more importantly, I think it's really the strategy that we've been approaching the business. I think first of all, we feel that PC is going to be, I think will be continue to be how do I say it? I think a device for improvement of profitability. And that obviously will be a long time to go. But more important is, I think the shape and the form of the PC industry is going to change over time. I think as our CEO been saying that PC is going to be smarter. And in fact, everything is going to be smarter. With that, we definitely feel that I think that PC is actually a good industry for us to get in. PC not necessarily in the current format, but obviously over the last, I would say maybe 12 months, I think that there is a refreshment from the commercial, I think business that actually help us to, I think to grow at a significant premium to the market. We believe that we will continue to look for the opportunities because even within a very stable or even declining in terms of units, I think we've been able to identify the high growth area where we actually put in a lot of innovative products, be able to do the product for the customers. As a result, I think that actually generates a result that we have very good results on PC.
So what is prompting these corporates to upgrade?
Well, I think one is the upgrade. The other, I would say, is generally the economy is actually getting better. I think that when the economy is getting better, I think company is going to refresh or to improve, I think, the infrastructure that they're doing business, and obviously that will help.
Will the economy, though, be hurt by the ongoing trade tensions?
I would say generally, I think the US and China are the two biggest economies in the world. Obviously, we believe that a satisfactory solution will be for the better of the world, and therefore will be better for, I think, the commercial customers as well as consumer customers.
How exposed are you to the trade tariffs that could disrupt the supply chain in the global electronics market? Well,
we are a global company. I think if you really look at our business, we actually been evenly spread around the four major regions: American region, China, Asia Pacific, EMEA. I think that we probably, as well as at the same time, we also have I think from a supply chain perspective, we have probably maybe 50-50. Some of those are, I think, in-house. Some of those are really third parties, I think, manufacturers. We'll obviously be able to move much faster, I think, to cater to whatever changes as a result of the, I think, trade negotiation between the two countries.
That was Wai-Ming Wong, CFO at Lenovo, talking with Bloomberg's Sherry An. Well, tech titans like Bill Gates and Mark Zuckerberg have become some of the biggest philanthropists in the world. Now, some are hoping to do good with a new kind of investment strategy. CEO of the Case Foundation and former AOL exec Gene Case is a leader in impact investing, a strategy aimed at supporting companies that promote social change. And as of 2017, there are over $228 billion in impact assets under management, according to the Global Impact Investing Network. Gene Case joins me now here in the studio to discuss. And you are also out with a new book.
I am.
Called Be Fearless: 5 Principles for a Life of Breakthrough and purpose. Thank you so much for being here.
Well, thanks, Emily. It's really great to be with you.
So in this book, you weave together stories of ordinary people who've accomplished extraordinary things.
That's exactly right.
What is the one thing you found that all of those ordinary people had in common?
Well, you know, the book, the subtitle is 5 Principles for a Life of Breakthroughs and Purpose. And what we were able to uncover through research is wherever transformational change has taken place, these 5 principles are present. But most importantly, we were able to debunk the myth that many people live with, that it takes some kind of special genius or going to the right school or having the right degree. And that's exciting news because, as you know, Emily, today in the United States, the number of startups are at a 30-year low. More companies are dying every day than being formed. The book is really a clarion call and a playbook for anybody who has ideas out there to get on the playing field and take them forward.
So how could we apply some of these principles to investing?
Sure.
Or to starting a company?
Sure. Well, you know, one of the principles is called reach beyond your bubble, and the idea there is bring together a diverse set of people with different backgrounds, different perspectives. And what I love about impact investing is it combines the expertise and sort of the rigor of people who've been in the financial world for a long time with those that understand how social impact and social change happens. Because as you know, an impact investment provides both a financial return and a social return. So it's a whole new category of investing. There are $228 billion under investment today, but that number doubled just in the last year. So we see really strong momentum. And you mentioned Mark Andreessen and Bill Gates, but as you know, the marquee names that are coming in, including the funds and some of the big banks that are getting in as well. It's really exciting. I think there's tremendous traction and momentum going forward.
So are you, and the Case Foundation doesn't do impact investing?
No, what we do is we support the field. So we have, for instance, some resources, the short guide on impact investing. We have a 10-year look back for people who want to see how the movement has developed so far. But I personally do the impact investing.
Have you found that you can actually make money and do good
absolutely.
At the same time?
Yes, I think there's a tremendous amount of research out there to debunk another myth, that impact investing is necessarily concessionary. It is not. Wharton has done extensive work. They looked at different asset classes, but particularly private equity, and demonstrated that the impact investments not only performed at market rate or did well in terms of their vintage year, in many cases outperformed.
So why doesn't the Case Foundation do impact investing?
Well, really the role of the Case Foundation is to build the market and support movements. And so we have used a blended approach in our philanthropy and impact work, where we use the resources of the foundation, we use our personal wealth wherever we can to invest in things to really move the needle.
So what are some trends you see coming in philanthropy and impact investing, let's say over the next 5 years?
Yeah, well, one trend I'm really excited by that I think is happening in both spaces, and that is rigor around measuring impact. You know, for many years, foundations have been out there, investors have been out there trying to have impact, but not really sure when they've actually achieved it. And so I don't know if you saw, but TPG Rise and Bono just announced, you know, that they're going to really have rigor around measurement and impact. There's another coalition we're supporting, which is called the Impact Measurement Project, which is also trying to make sure that that kind of careful measurement and reporting out is taking place.
Now, Steve Case, your husband, has talked about the rise of the rest, the importance of looking outside of Silicon Valley. Are you seeing those opportunities in impact investing outside of Silicon Valley?
It's super exciting. You know the data, Emily. You know, last year in America, only 2% of venture capital went to firms with a woman-led founder, less than 1% African American. But the more shocking thing is 75% just went to 3 places: California, New York, and Massachusetts. So take an entire state like Florida, which is the 3rd largest in the nation. They got less than 2% of venture capital last year. So yeah, rise of the rest is really intended, and Steve has done a great job to go out there and spotlight the great innovation and entrepreneurs that we're seeing between the coasts.
It's interesting that you mentioned this, because we just had Keith Raboy on the show, who's joining Founders Fund, and I asked him the very same question, and he thinks that the nucleus is still in Silicon Valley. This is where most of the talent is. This is where it is easiest to scale a huge company because of that.
Yeah, so I think, you know, we really give great respect to Silicon Valley for all that it's been, but it is a part of the solution, not the solution in America. And indeed, if you look at where Fortune 500 companies have been founded, most of them have been founded outside of Silicon Valley, between the coasts. So, you know, understanding our own secret sauce of how we got here, both in terms of doing everything we can to increase the number of startups, getting all the players on the field, because right now about 50% are left on the sidelines between women and people of color. You know, it's really an economic imperative in our nation. It's startups that bring the jobs and provide that economic engine.
Now, I wanted to ask you a question about Amazon HQ too, because Amazon HQ2 is also setting up in your backyard,
it is,
Northern
Alexandria, Virginia. Yeah.
And you know, there was a lot of development there when AOL was
we
at
started
its
and
height.
built our company there, yes.
But Amazon just pulled out of New York because all the protests. We haven't heard much from Northern Virginia.
Virginia's embracing Amazon in a really big way.
And is that a good thing, and did New York make a mistake?
So I think it's unclear to me, but it seems that that New York decision came kind of late in the game, and they hadn't done the consensus building that they had done in Virginia. So as a result, the communities around Virginia and in Washington, D.C. are ready and prepared and were bought in. I'm not sure the same thing happened in New York, and that's the reason they've pulled out. But quite honestly, my hope is that they will go to numerous communities, and we were disappointed to think they'd go to New York, where, you know, new startups aren't sort of dying there, okay? They are in different parts of the country. And if they build headquarters or even just a significant office, as many Silicon Valley companies are doing. I was in Indianapolis earlier this week. Salesforce has a huge office there. So we are beginning to see some of these West Coast companies move into the Midwest. My hope is Amazon will do the same.
All right. Jean Case, CEO and co-founder of the Case Foundation, thank you so much for being here. Good
Thanks, Emily. Great to be with you.
In the studio. Okay. Well, a group of Microsoft employees are demanding that the company abandon a contract with the U.S. Army to build versions of its HoloLens augmented reality headsets for the battlefield. A new letter addressed to CEO Satya Nadella and Chief Legal Officer Brad Smith is calling on the company to cancel a $480 million military contract. The move, the latest in a series of protests from workers at tech companies objecting to certain uses of the products they are building. Coming up, will texting a personal shopper help customers who feel overwhelmed by the choices online? A new Walmart-backed startup thinks so. We're going to hear from JetBlack co-founder and CEO Jenny Fleiss next. This is Bloomberg. Walmart unveiled JetBlack, a concierge shopping service for busy urban families, back in May. For $50 a month, members can text their requests and receive same-day delivery from Walmart, Jet, and other retailers. So how has consumer traction been the last few months? As part of our Retail Transform series, I caught up with JetBlack CEO and co-founder Jenny Fleiss.
JetBlack traction has been amazing. Customers are fanatical about the service, which is so rewarding to be investing time in something that you know is really needed. The average customer is ordering over 10 items a week. 2/3 of our customers are ordering something on any given week, so it's just a level of engagement and wallet share that I've never seen before.
What's the most common use case? Like, what's the most common reason people call you?
Yeah, so there's like 3 main use cases. One is just I need to reorder something, like basic paper towels, laundry detergent. Another is for a recommendation for something like a birthday gift, right? You're going to your kid's going to a birthday party or something. And then the third is a specific product. You might take a photo of someone's sneakers at the gym that you really like, or you might screenshot something that you think is cool and you just don't have time to order it yourself, or you don't want to put in your payment information and all those details.
How do you keep users engaged and coming back?
Yeah, so users for us, we're over text message, so it's personal shopping over text message, and so there's an element of text where it's just so front and center in a consumer's life. And we do give you updates of, hey, your order is delivered, et cetera. So even that sometimes is a trigger to keep the customer reminded of us. But it's truly this like mind-dumping behavior. The moment you think of something you need, whether it's the reorder of laundry detergent or it's a Valentine's Day gift for your kids, you can just text us, get it off your plate. And we find that that behavior is so convenient that that's in and of itself enough to keep people coming back.
So it's $50 a month?
Yes.
You know, it sounds great for upscale New Yorkers, but what about the rest of us? Is, a diverse population going to use this?
So we launched JetBlack 8 months ago. It is $50 a month, members only, New York City right now. This business will grow and it will evolve. We are in the early innings, and much in the way that Uber and Instacart have different models by city, we're very aware that we might need to adjust and tweak the model or have different tiers of the service depending on the target demographic and the city and the environment that we're in.
So it could be cheaper somewhere else?
It could be cheaper, or for a different tier of service, right? Right now we give customers free gift wrapping, easy returns, we just pick it up and deal with it. Same and next day delivery is included. We can shop for any and everything. So all of those perks for this member let her save so much time that it really is worth it. And I think you need to rethink about this service, not compared to other shopping vehicles out there, but as a way to save time. And so time is worth that $50 a month.
You said her. Are women your primary customers?
A lot of our consumers are busy moms. I think that's both just naturally the consumer who's doing the bulk of household shopping and purchase decisions, and who's busier than ever, right? Like macro trends, women are working more than ever before, primary breadwinner, and yet they're still in charge of the household and having kids. So this is a great way to save time.
So you can save me on Valentine's Day and other holidays.
I can save you the surprise gift on Valentine's Day for your kids, the back to school sign you didn't, think about or have time to put together, the last minute birthday gift for a kid's party, or something that maybe like you've wanted to buy but you just didn't have time to get around to.
That said, Amazon makes things pretty easy, and it's $100 a year for Prime. They've also got same-day delivery. How do you compete with that?
Yeah, so there's a few things that we found are missing in consumers' life as we think of where's the white space opportunity. One is a brand that has an emotional connection. So consumers are really longing for a brand to feel magical and delightful. Shopping has become a chore. It's not delightful. It's something that you check off your list. You need to get it done. It's like a burden that weighs on you. So I think that's one big opportunity. I think there's also things like delivery in bags instead of boxes, easy returns, a good gift wrapping experience that are really powerful. And then lastly, I would say conversational commerce, the ability to text or use your voice, is really powerful in helping people winnow down the options. The internet has given us tens of thousands of options at our fingertips, and as a result, you can go into just a tailspin and researching the perfect area rug for your entryway and reading reviews and all these considerations and searching for that ideal fit. If we can leverage personalization and recommendation tools to hone to 3 options that are the best and let you choose from those, then that's really powerful.
When are you going to launch in other cities, Jet Black?
New York is a huge opportunity, right? So it's a large market. We see other competitors doing billions of dollars of sales. So we're very focused, at least for the next year, on New York. But I think this has potential for sure, at least all over this country, if not all over the world.
And when will we see more coming out of Walmart's tech incubator? Because you were the first.
Very soon. Yeah, we were the first. And there's about 5 companies now, all in, so the others are in stealth mode. But they're all starting to come out of the woodwork. And I'm really excited about both the progress they've made, but also how they'll all converge together.
That was Jet Black CEO Jenny Fleiss. Still ahead, will the Academy Awards this Sunday mark Netflix's biggest win yet? How the streaming giant took on the film industry next. This is Bloomberg. Elon Musk's SpaceX has launched its second rocket of the year. The Falcon 9 lifted off from Cape Canaveral in Florida, carrying 3 payloads, including an Indonesian satellite and an Israeli lunar lander. The Israeli craft will travel to the moon after deployment using its own power. While the Netflix movie Roma is the favorite to win the Academy Award for Best Picture this Saturday, the highest accolade at the American film's most prestigious award show. And a victory would complete Netflix's transformation from Silicon Valley interloper to Hollywood insider. Bloomberg's Anusha Skui joins us from LA with more. So Anusha, if Netflix wins an Oscar on Sunday, will that really change Netflix's status in Hollywood, or has it already changed?
Obviously Netflix has made a huge change in Hollywood and across, most countries in terms of how we consume content. It's really changed things because we stay at home, and it's not just Netflix content. It's promoted other content creators and other studios like HBO to kind of up their game a bit and put out other content to keep us at home rather than going to theaters, and that's changed the model and putting pressure on it changing even further. But to get this accolade, it does something different. It means that if you're the highest, technician in Hollywood, the best director, and you make the most acclaimed content, like Alfonso Cuarón, who was the director of Gravity, and won an Academy Award for that, it means that it's not just going to be a fluke one-time thing with Roma. It means that more people like him are going to go to Netflix to make their movies.
Now, Alfonso Cuarón is nominated in 3 different categories. If there was going to be an upset in any category, where do you expect to see it?
I actually expect to see it in Best Picture because there's this kind of mystery, and there's mathematics, and there's probability, and you can look at different awards that have happened over the recent months, the different guilds. Those people actually go on to vote in the Oscars, and some of them are very closely correlated. So, for example, the Directors Guild gave their top award to Alfonso Cuarón, and it's almost always the case that person then goes on to win the Oscar. But there are a lot of other elements that affect Best Picture. So, for example, the Screen Actors Guild, which is the actors are the biggest block of voters in the Academy, they actually picked Black Panther as their winner in their awards. So you could easily see an upset. And, it goes to some of the heart of the question. And, who saw Roma? We don't know. Netflix hasn't, told anyone. They've split with kind of convention in terms of not only how they rolled the film out, but how they disclosed viewing numbers. The Academy is overwhelmingly white and male and older. So did they watch this film? Did they go to theaters? Who did it appeal to? We don't know. So maybe they didn't watch it. Maybe they didn't vote for it. So that's the one where I see a chance of an upset.
All right, well, I'll have the popcorn out this weekend, and I know you'll be hard at work covering the awards. Bloomberg's Anusha Sakui, thank you for that Friday update. That does it for this edition of Bloomberg Technology. We are live streaming on Twitter. You can check us out at Technology, and be sure to follow our Global Breaking News Network TikTok on Twitter. This is Bloomberg.